Thank you everyone that joining here offline and online today after 2 very intensive days. I'm very happy to open the Investor Day, and there is a lot of responsibility and a lot of messages that probably we will send today. But no more blah blah blah. I would love to see on this stage Florian. Can we put Florian online, so the audience can see him? Florian's supposed to be in Berlin, but again, coming back to the COVID-19, he was informed that he'd rather not fly to Berlin because of the situation that Germany becoming a bit red, and maybe he should not consider to travel here. But thank you so much, Florian, for being with us today. And of course, giving us your time, expert, and phenomenal activity. So please introduce yourself.
Okay, it's a pleasure to be here. I'm sorry for not being physically there. It was all meant to be back in my home country. So my name is Florian. I'm based in Geneva. We run a company focused on impact investing. So we invest in commercial companies servicing the low-income population in emerging markets, Africa, Asia, and Latin America. And we measure as an impact investor the financial and social, or the impact returns of the companies, what they perform. And we usually do private debt and private equity in companies, more and more going into the technology field right now. So I'm really excited to be here. Thank you, Mali, for inviting me.
Thank you so much. A short disclaimer from my side. You know, Florian is part of a very big global mission, which I'm very proud to be part of it. We should say that loud, although he is from Geneva and I'm from Berlin, and this is what's happening, by the way, during COVID-19. We, go through these obstacles of never met each other, but closing amazing deals. So this is, one of my message to you today, also as an investor, also as a founder. Don't hesitate to push forward because investors are active even in this time. So before we will talk a bit about bamboo and SDG500, Florian, we have a lot of discussion between the partner, between ourselves, between many governments and people that will join and, in a process to join this global mission. Would you like to share with us how actually the idea of SDG 500 came, let's say, to reality?
Absolutely. I mean, when we started in 2007 to invest in commercial companies in emerging markets, of course, there was no technology. And it was tough to invest, risky to invest, very difficult to raise funds, and then also to deploy them. And that has changed over the time because technology is a key enabler to resolve the issue of access and affordability for goods and services in these geographies. So, and that's number one. Number two, we have seen that the theme of impact investing, or at least also in Germany now ESG investing or sustainable investing, is a big push, not only from the need on the ground, but also from the investor side. And a third very interesting trend is that the old non-for-profit or aid money or philanthropic money is also moving into the space of impact investing, where we were in the past rather between two chairs, because the philanthropists would say, you guys, you say you do social investing, but it's not, you disguise charts, it's all about money. And then you would have the for-profit investors saying, you guys are tree huggers because you say you do for-profit investment, but it's not really. And all of them are taught wrong. And the beauty of that, as we are in the fourth industrial revolution and technology changes everything, not only democracies, not only potential of, technology itself to run it, but also it is an amazing chance for the forgotten half of the world's population, the unlucky born, because we all believe we are very smart. And again, yes, for sure, we might be, but we are lucky born, the right time, right place, with a good education, and then do our portion. And that technology resolves at a price point where economic inclusion comes into, and now not from an exclusive old world style, but from an inclusive way of that you have different players sitting at the same table, looking at an opportunity to invest, but also to resolve an issue at the same time, and do that. And that has really happened, that even with Bamboo Capital, where we originally were a private equity and debt investor with our own funds, we raise them, we deploy them in our specialty, of course, in emerging markets. That has changed now, where we, very exciting also Mali, to partner with you and on that, but also with United Nations agencies, with global NGOs like CARE or AGRA, with large industrial organizations like SmartAfrica, all sitting at the same table saying, okay, how can we do early stage SME or venture investments with private debt and private equity in a way where we actually support each other? And that is the result of a 3 years work we had with our partners, and we announced it at the World Economic Forum in Davos, was retained as one of the major outcomes from Davos right before the lockdown. And even during the lockdown, a group called the GISD, the Global Investment for Sustainable Development, actually retained SDG500 as an amazing way to invest in SDGs and the UN Sustainable Development Goals. And here we are now taking this further. So despite all the crisis, and maybe because also due to the crisis, the urgency and the need and the potential to invest in early stage companies in emerging markets is exciting. Of course, these companies are not only based there. Tech companies can sit anywhere in the world. That's why we source them from anywhere in the world. But we look at technologies enabling the goods and services for the low-income population. So typically it's fintech, edtech, agri-tech, clean tech, health tech, these general pieces, which that's very exciting.
Thank you, Florian. You almost cover everything, which I really appreciate it. And I know that usually you have your great speech. There is a lot of government that already involved, and I would like you to share a bit because, another work that we're doing here, and I think it came, as you mentioned, from Davos, but it came strongly also due to COVID-19, that government, the public sector as well, understand how much they need to involve in the emerging market. So, we cannot refer China as the emerging market, but absolutely Africa, absolutely the topic of the She Fund when it comes to the female founder. And I want you to give us some overview because, one of the work that we're doing is to make sure that the German government will enjoy that as well. And part of this magic will come also here to Germany, definitely to Berlin. We are in a conference that on behalf of the Berlin Senate, talking about communication and collaboration between Berlin and Asia. So Asia has different faces.
Absolutely. I mean, look, our focus is on the big populated countries. In Asia, for example, South and Southeast Asia, of course, big countries. And not talking necessarily now at China and India, which have all types of facets because of the size we have, but we're talking about Cambodia, talking Bangladesh, Indonesia, Philippines, Myanmar. So big populated countries where there is on one side, of course, the amazing potential to invest in technologies where the adoption rate is extremely fast. At light speed, you don't have to disrupt, you leapfrog. But on the other side, a lot of historically money has been provided for free to do aid work on the ground by governments. And this is where the understanding at SDG 500 is very different because we have already today, now, the EU has provided 40 million euros first loss. So it's a catalytic capital. It is in the same fund, it's there. We have Luxembourg government, Swiss government, we have the Norwegian government, now the Swedish is joining, the US government also joining, really on supporting and seeding funds so that private investors can invest on top and join, and the risk reward return is adjusted. So we're not gambling on a 35% IRR in a VC Silicon Valley style, hoping to have an IPO. We're looking at a longer time period, not 3 to 5 years, but 7 to 10 years. We're looking at deploying capital in several tranches so that we can accompany the entrepreneurs on developing their company. but also we are measuring exactly what's happening on the ground. And that is what our, the catalytic capital providers, the governments, and we hope to have also Germany joining soon, actually will, the data they're looking at is not how much will 5, 10, or 50 million result in a return of financial. That's for the senior investors, the private one, but it's to understand what happens actually on the ground on an impact side in terms of poverty uplift, in terms of economic inclusion, in terms of livelihood, in terms of energy access, in terms of healthcare access. So there are many aspects. These things we measure, and each fund has a clear impact framework, because that's the data governments understand that investing in here and seeding these funds is not a one-off, but it actually has a long-term approach and a clear support of entrepreneurs and SMEs worldwide.
Fantastic. In this audience today, absolutely online and also offline, there are very important people. We have Miguel here, we have Angela here. Miguel is the person that I told you that you have to talk with, and is investor actually from a family office in the Philippines, and Angela doing the same in India, which we see a lot of bridging that already happening from Europe, let's call it in a general for this discussion, with Asia. Although you are in Geneva, but you are very, very active, and I want you to share with us, let's say as the founders, how you allocated the really, the superstar, the founders, the winner that you are investing in, although you are sitting in Europe.
That's a question, of course, and a very valid one we get very often. Again, initially, and again, we have investors all over the globe. We have also, big team, family office, you mentioned, of course, the big portion of it, because very early on, also we have Asian family offices, Middle Eastern family offices, Latin American family offices, besides, of course, the European ones, who have invested and trusted on us in an early stage to raise the funds, to provide the funds, and then to invest. The beauty of this is the investment we do is in the same way. You have a regulated fund. The reporting is standard. However, the investment we do is earlier stage and in more riskier environments. And in the past, that has provided some, on the debt side, easier returns with good IRRs. On the equity side, much more risky because you stay longer. So even if you calculate an IRR in percentage, a 3-year time spread, a 20% IRR is very different in terms of 10 years, 20% IRR, just on the multiple you would have to bring back to the investor. So there were a lot of learnings in there. Also, we learned is that when we source and fund entrepreneurs, whether they are in Europe supporting or servicing the low-income population in emerging markets, or whether they are locally, that the need and the support sitting on the board observer seats, working with them is the same. So our intention is not just to provide capital or be a private equity investor looking for the IRR, but also to accompany them in terms of the strategy, in terms of the impact the company might provide, business as a force for good. So you have a stakeholder view, not just a shareholder view. So there are many angles to it. But the most exciting part is when we have seen the role of technology. And we have seen that early on that, of course, you had microfinance working initially very well. It's a well-established market to bank unbanked people on a small ticket. But then we had a huge wave through the connectivity of cell phones. As a next logical step now, mobile money. And mobile money is much bigger and much faster adopted in these countries than in the developed world, because you don't have to disrupt existing food chains. And then we look into distributed energy, not the energy distribution. So where basically you create a smart utility grid. So you connect individual homes in rural places. And suddenly, and these are financed, and the population creates a credit history through the financing, all data-driven. So the data is not only controlling the equipment and the performance locally, whether they're in Rwanda, in Togo, or in Myanmar. It's also regarding the workforce of providing the service, like Uber way with retail stores, but specifically then servicing the population. The population creates a credit history. And now you end up with connected rural homes. And that's where really the journey begins. And actually, COVID is accelerating the digitalization and the need of that, instead of slowing it down, as we're all aware, but also in emerging markets. So now you have a home which, as its prime point, has energy, which didn't have before. And there's still 1.1 billion people without electricity at home in the world. You have the financing and the service mechanism, all done through digital. And you have internet access. And this is where the IoT starts. So it goes both ways. It's not only now the service to the population, but also their productivity backward. So we look at IoT models, we look at blockchain because of the distributed ledger and smart contracts. Yeah, we're looking at the trading side, when it comes from food security. So there's a massive change going on in emerging markets, not in the media, not visible right now. We are all distracted by all the disruptions happening on governments, democracies, and the big tech giants, with the big corporations. But this is an amazing opportunity to invest. So it's not just to do good, but really to scale. That's why we say technology is leapfrogging emerging markets, actually leapfrogging poverty in a transformative way at a price point the population can pay. So that population no longer needs to go elsewhere from the countryside to the city, or from the poorer countries to the richer countries, but they can actually stay and participate in the real economy.
Thank you, Florian, for this word. All panels that we actually had yesterday or day before deal with how we attract Asian investors to come to the Berlin ecosystem, which is very flourishing, a very disruptive one. And we are talking in general, the wave in, and now we're actually talking about the wave out, which I really, really like it. And I want you to share with the audience today about the sustainability topic. We're talking about this there are, I would say, farming, agricultural, I would say techie new startup that's starting to rise. There is a lot of awareness to this topic, but absolutely not in the level of what we see in emerging markets. Yesterday, I had a discussion also from someone from the EIT and also one of the founder here, and we said, here you can grow, you can use the knowledge, the capital, like a laboratory, but eventually your scaling market is out there. So it's a bit different from what you're saying, just taking the money and invest there. I would like you to share also about this, because eventually, also the German government declared huge support in Africa, for example. This is, the wave that's coming in Africa is really, coming on us, and there is a lot of things happening there. Please share with us how you see all this picture and how everything is eventually coming back to Europe and level up or supporting the innovation that we have here.
So it's a very valid point. I mean, we're looking at 700 companies a year usually from a due diligence perspective at a different, scale in the funnel. Many of the tech companies have amazing technology, have amazing ideas, but the big problem is the adoption, and especially the adoption in emerged markets, in the rich countries, because you need to disrupt. And as you need to disrupt, you need a lot of money to push others away, whether this is in the fintech space, whether this is in the clean tech space, this is whether you have all of these. Now, when you go to emerging markets, the adoption is faster, you need less money. And we have had actually now companies like Lydia in Nigeria, for example, a tech company, fintech company, they had a success, they had the scale, and they're now coming to Europe. So if you look at your company and your model, you can see that actually from the Berlin ecosystem, you take tech companies and you focus on opportunities, because technology, from distance is very easy to handle, that you look at emerging markets to scale and to look for the adoption in a much faster and cheaper way. That's number one. The second thing is also, as you're in Germany, and you have your own ecosystem when speaking to the German government, rather than pumping billions into emerging markets on aid money and support, it should be invested. So therefore, it's actually the idea is, rather than providing just a grant to a company, yeah, or grant somewhere, it is to go and seed and support the fund structures we have, which is debt and equity, and to help scale these companies, whether they're in Berlin or locally. And this is the beauty, actually, if people understand that we are in an inclusive space where we look at the innovation does not necessarily lead only on the technology or the business model, but also on how to invest and how to fund SMEs in companies worldwide. And that's where the beauty is, that we have no longer, of course, the national boundaries, whether it's Germany or the EU. And that's why the EU actually participated already with first loss themselves into it. Because, you know, to fund smallholder farmers' livelihood in sub-Saharan Africa has a direct impact on issues we have today in terms of food security and in terms of mass migration mitigation. So you can see that as much as we use a lot of money right now during COVID to bail out our own economies and especially support SMEs with big money, we should not forget the need, but also a huge opportunity for our companies, wherever they sit, to participate in these type of models and support on impact investing.
Fantastic. I mean, as raising MagdaGroup, a fund of fund myself, I do understand how much LPs and government, public sector, and also the private sector is so important, because suddenly we see much more larger picture that people want to, you know, bring also an impact with this, and it's much more powerful. I totally agree with the aspect of join forces in a global level. Absolutely. We do have the last 5 minutes. Any one question from the audience to Florian? Okay, there is one on Slido. Let me check that. I mean, it's empty. Would you like to ask it yourself, Caroline? Okay, Caroline will read the question. Did you hear it?
No.
So what kind of metrics are you using for returns?
So the metrics for the financial returns are standard metrics when it's private debt, yeah, in terms of the period, the liquidity, whether it's fixed income or whether it's illiquid, you know, the different standard metrics we use in private debt or private equity overall. That's basically the IRR over spread, time spread. When it comes to impact side, of course, that's much more subtle, because each fund has its own theory of change. So whether it's financing smallholder farmers or financing SMEs in the least developed countries, or investing in health tech solutions for access to healthcare, or whether it's tech for impact overall on the private equity side, or, you know, or whether it's, actually you mentioned it before, Mali, or whether it's the gender lens and focus. So when we invest and bring money to the company, you know, in which way can we traceably improve, you know, women as beneficiaries, women as employees, and women-led organizations. So those are the things we have a clear lens. We look at always through all of them, of course, gender and youth is a big topic, because that's the part where you kick in very significantly. So we have, each fund has a clear impact framework with specific metrics. And those are also then looked at according to the UN Sustainable Development Goals. So we do an impact report and you have the numbers, you know exactly what has happened on the ground. Of course, technology company is much easier than in old ways, having some reports and some numbers shuffled through an Excel file, and then you have to verify afterwards whether this is really true what they're reporting. Of course, technology is much more transparent in
Thank you for mentioning the gender topic, and it isn't from my side, so I know that this is very natural for you, and this is a great example of, white male investor, let's call it this way, that actually thinking the right way, how you see the future in the next 10 years, it's an important responsibility also for the LPs and for the GPs as well. Last minute, or last things from my side, Florian, actually all these missions sometimes looks huge umbrella and very, very big mission. In 2 seconds, I really want you to say, what are you looking for when you search for LPs?
Yes, again, it is very cumbersome and a lot to talk and discuss because it's not a standard plain vanilla fund structure for somebody to invest. Yeah, so we're looking for first loss investors, so foundations and governments to further seed so that they protect the senior investors. And then for the senior investors, we're looking at an overall fund size of 500 million. We are around about 100 today. And then we're looking for equity investors in the mezzanine, and we're looking for debt investors on top of that vehicle. So it can be anything from a non-for-profit organization or a government. It can be development finance institution, which is still government. It can be institutional investors like pension funds, fund of funds in many ways. It can be very often family office or private investors, qualified investors, to participate in. So it really, there's a clear alignment of all type of investors on the same goal, on the impact on the ground, and with clear benefits for all parties participating.
For sure. Thank you so much, Florian, for this value, discussion today. And last word from my side, I hope that very soon we will see BMZ, KfW with us as well. I know it's in a process because you already gained great investors with you as well. Thank you so much. And if you want to talk about investing in emerging market, please address us, Florian, myself. We would love to talk about this. Thank you, Florian. Goodbye.
Thank you very much.